Good morning, Wall Street winners. It is Wednesday, March 12th, and we have just had some data come in on U.S. CPI. And although egg prices are up significantly, mostly due to bird flu in the U.S. and how they have counteracted that through the elimination of birds, and hence the number of birds available to produce eggs have dramatically decreased. Everything else is better than expected at this point. So U.S. inflation rose at its slowest pace in 4 months, which is positive. But if you look into this and give it some further analysis, what we haven't seen, because the tariffs that have caused the market to go into a state of increased volatility have not come into effect yet. Remember, the tariffs were announced, and the uncertainty around them is creating the volatility in the market. But the tariffs have been, with the exception of, I guess, the Chinese tariffs, the tariffs have been pushed off and delayed until April 2nd. So the effects of the tariffs will not affect the CPI until they come in place and they actually work their way into the system and show up in prices to the consumer. So that part we're not going to see for probably 2 to 3 months at this point, based on where we are now. So it's not unexpected to see the numbers here with CPI where they are. It's basically we're on the same trajectory that we were before any of the talk of these tariffs came in place, and that was, we had a pretty good and strong economy. So what's going to change potentially in the economy, and hence why the market has reacted and dropped as much as it has, is inflation is expected to go up and CPI will increase potentially significantly, but we don't know yet, after the effect of the tariffs is felt. So what we're seeing in the markets is a bit of a, we'll call it recovery, but nowhere near where it needs to be. So the markets are reacting positively because inflation has remained steady, but that's only because the tariffs haven't come into effect. So you kind of had to expect that this was going to be the case, and this is going to be a momentary blip, because if the tariffs continue, and that's the whole uncertainty that's causing the volatility. Anyway, it's a good thing that things are coming back. There's no question about that. I think it's going to be short-lived, and I know there's going to be more uncertainty because there's still a ton of back and forth on again, off again tariffs and decisions that are made in a flippant way. So with all of that, it's still risk on, and be careful out there. That said, when markets go up, as they look like they're going to this morning, it's a potential opportunity for you to now buy a put on an index like the NASDAQ, or on something like the QQQ, which represents technology stocks, expecting it to go down further. So if you had bought a put yesterday and markets went up today, you'd have suffered a short-term loss in that. You'd be in the red. But if you buy it today and markets correct or go down tomorrow or in the next few days, depending on the length of your put, let's say it's a month out, if they go down more between now and when that put would expire, you'll be in the money. So you'll have made money. Anyway, that's where we are. If we take a look at the Yahoo Finance app, so don't get too excited about the news, is all that I'm saying here today. We can see that crude is up almost $1, which is a bit of a surprise. So crude is definitely very, very volatile these days, and not sure what's causing that. The NASDAQ up 320 this morning, so tech should recover a little bit initially. The VIX has dropped 152, but still up at 2540, and that'll change. It's probably going to move up into the 30s at some point, based on the tariff craziness going on. You can see we had a terrible day yesterday, but a lot of green in the pre-market on the screen here. But again, be very cautious today. This does not mean that it's going to continue on an upward trajectory. Vistra had a good day yesterday, and it looks like it's on track for another good day today. So as a utility, that's been doing well. I'd expect Ed has been doing well at the same time. Another Consolidated Edison, another utility. Oil looks like it's on track to have a positive start anyway to the day based on the green on the screen. And then we get down into our tech stocks, and mostly green on the screen here, but still really miles away from where they were a month ago or even 2 to 3 weeks ago after February 19th, when it made it started to turn, when it hit its peak and started to come off that high or that peak. So just scrolling down here, looking really for any anomalies in here, and don't see many of them. They're just recovering in an expected range, really, is what we're seeing. So that's where we are in the markets today. Tesla is up, so this would be an interesting one to look at a put on if you want an individual stock to put a put on, because I do think numbers are going to be way down despite President Trump getting into a Tesla and having received one with Musk there at the White House yesterday. That was quite the gimmick and show. Meta looks like it's going to pop a little bit today, but still way off of its highs. Netflix had a good day yesterday. It's up again today. Oddly enough, Alibaba is down slightly. It had a good day yesterday, but the Chinese stocks have been having a bit of a recovery lately. So I would have expected more there. Nvidia's on the move up. Google has a great price, but it could come down further. TSM not recovering nearly as much as I would have thought, at about $4. And then the financials. The financials should do well at the same time today. There should be a fair bit of green on the screen here. Yeah, you can see Goldman up $12. And all of the others in the green. So that's where we are today. Good luck in your trades. Stay risk averse. This is not the beginning of a recovery, in my opinion. So don't jump in and think buying the dip today is going to serve you well in the short term. Be very careful and look after and manage your capital, manage your risk and downside. Good luck in your trades. And if you like these videos,